Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to wealth building, commodities, and or financial topics. Let's dive in. Let's see what's going on and what people are sharing. You can follow me at Finding_Finance on Twitter, or you can, or you can join our community at finding-value.com, where I dive deeper into how to play these markets, individual companies, individual sectors, and dive real deep into it. I do a lot of training on how to become a better investor over time. So all of that is there, and we still have a discount coupon code LEAP, LEAP, if you're interested. So coming on down, we got Robert. So it begins with copper. South Korea's LSMNM to cut copper production on concentrate shortage. It's now occurring. South Korea-based copper smelter, LS Metals and Materials, is to cut copper production 40,000 million tons in 2024 due to a shortage of copper concentrate supply, according to market sources. Here we go. This is the beginning of the beginning. Well, maybe it's the beginning. I don't know how to say that. Is it the beginning of the beginning, or is it the beginning of the end of the copper boom here? I think it's the beginning of the beginning. Coming down, I was told long ago so many people would pile into uranium stocks almost blindly, sending our portfolios parabolic. Where they at? Well, I'm going to say this, guys. I think that uranium stocks are still going to go parabolic. And I think that we are earlier than what a lot of people think we are in the cycle. Not the uranium cycle. I'm talking about the commodity cycle. And just let me talk a little bit about my opinions around it. In the 1970s, we saw an outperformance of precious metals and commodities in relationship to technology stocks. And right now, what we just went through, technology stocks were the leader. And what we did is we went from one market condition to a different market condition. And I think we're switching back to commodities and precious metals being in favor, as you've seen gold and silver break out. Uranium is part of the commodity sector. And what I've told in my opinions of what I think drives uranium and all the other commodities is not the sector itself. It's the actual money flows that are behind the big macro viewpoint and movements. So the macro is what's driving it, and people are too deep in the weeds looking at the sectors, all these different sectors, and their fundamentals of the sector. Now, when we go into commodities and money starts to rotate, then the sector's fundamentals are going to, in my opinion, matter a lot. But again, uranium isn't the main driver. Uranium is a small little tertiary sector that people don't focus on. Oil's the big boy. So oil and technology stocks. If technology stocks are going up and doing well, the money is going to stay in technology. We're waiting for technology to roll over and that money to rotate out of tech. We know it's rotating out of bonds already. And then precious metals and commodities are going to rip. Face ripping movements, in my opinion, there. So that's what I think could potentially occur. We got Eric Nuttall here. He says, there's no energy transition to something when there is neither a universally economic nor technically feasible alternative. Energy demand has never fallen. It's an all of the above answer. To say otherwise, in my opinion, is energy ignorant, intentionally disingenuous, or delusional. I love it. Coming on down, I present to you the lady that said Bitcoin will go to 2 million per coin by the end of 2024. Good luck. And then our sinking fast investors have pulled a net of 2.2 billion from ARK's active funds this year, topping outflows from all of 2023. She's made some pretty bad calls at some really, basically, she just follows sentiment. She is sentiment. Gold Silver HQ says some fat cats, more than likely JP Morgan, they manipulate silver more than anybody else. Says when we see a smackdown like yesterday, realize number one, what you are seeing is not real gold and silver changing hands. And it's just the futures contract. And what they're doing is they're continuing to pile paper into the market to put the fire out. Like they're putting fire out with paper. They're not just slowly putting it, they're just putting a bunch of futures contract, which is paper, over the move. So eventually the physical market will win out, I think. It's going to take some time. Financial Juice says, ex-official, Japan is very close to intervention if the yen falls more. So there could be some intervention that comes with some of these currencies. We've got the uranium short squeeze coming. I just thought that was funny, had to share it, but I do actually think it's coming. I do. I think there's going to be a short squeeze. And what I'll say there is everyone's kind of just sitting there comfortable. Sentiment is negative at the moment. And then once we start to see price rise, the sentiment's going to come back and everyone's going to come piling in. And it's going to be because price will convince them to buy it instead of getting in early and buying it when it's cheap. They're going to wait 20, 30, 40% higher, buy it, or buy it even higher than that, using price as the determining factor of when to purchase. The retail sector does that. Everything has been distorted to the highest order and then some. The economy is fake. There's nothing here that is real. That's all that fiscal spending, guys. The fiscal spending is creating that. And that's where I was real confused because we see the yield curve invert and I'm like, well, they're still spending like massively, which could hide or distort the signal. So it's a tough market condition. He's got it right here, though. JP Morgan's CEO says there's a chance stagflation could happen again. I totally agree with that. It says could be worse, could have bought bonds. I think that's funny. So even though some of us have been riding a consolidation, bonds have been absolutely a horrible investment since 2020 with the increasing yields. Here's Grady here. He says, been saying gold looks strong and miners are bottoming. Now got gold breakout and miners have turned. Said that this chart below is turning, and that's First Majestic now bottomed against NVIDIA and has topping patterns for NVIDIA. So I agree. This guy's been nailing these calls. Very good job for Grady there. He says, expecting an around the apex move on up. And then as a proxy ratio chart for the two sectors, silver producer AG is extremely undervalued versus tech darling NVIDIA. I agree, it is. Market Mayhem says energy has the lowest 2-year correlation with tech. It's also objectively cheap, and there are a number of tailwinds that can keep driving the sector. All of this make it an attractive place to buy dips in my view. And this is the 2-year correlation with tech and energy is the least correlated. We also have gold miners here. In the 1970s, we saw precious metals and commodities, which is basically gold miners and energy, outperform tech. And these were the least two correlated. That is exactly what I'm looking for. And you can chart technology stocks against XLE energy and see how they are behaving against each other. And what we're seeing is we're about to see energy break out against technology stocks or the NASDAQ. We are right there ready to break. So I hope you guys are ready for this because we're about to see a mass outperformance, I think, with energy outperforming tech, which will also push the gold and silver miners up dramatically. And we could see an outperformance of gold and possibly silver and all the precious metals. China has quietly accumulated large quantities of gold for 17 straight months to the tune of 73 million ounces. China's economic strategy involves diversifying away from the dollar, which dominates global trade and commodity pricing. Despite its rise as an economic power, China's vast reserves are predominantly in USD, an exposure it aims to minimize. To reduce this reliance, the People's Bank of China is diversifying by increasing its gold holdings. Since 2011, China has decreased its dollar reserves by a third. down to approximately 800 billion. Meanwhile, China's gold reserves have skyrocketed. And you know what China knows? They know this tech bubble, and they know that energy and gold miners and gold are going to go up. They know it's coming. A very smart move, and I'm doing the same thing they're doing. Same thing. SPX adjusted for inflation. A picture paints a thousand words. Look at this, guys. We're ready to break down here. I'm probably going to bear market territory if we break this red line here. So basically what we've got is we come on up, we peaked, fell below the long-term trend line here. This long-term trend line is a recovery phase of real estate. So we bottomed in 2009, 2010, 2011. We made a huge move up with declining interest rates in a low inflation, low interest rate environment. Interest rates started to increase after 2021 or so, 2020, 2021. They were increasing here, and they caused the pullback, which is the breakout of the trend line. We had a pause of interest rates where this came back up to do a retest from this breakout line. We're retesting, and we're going to break lower here. So he says a controlled bull market to go up maybe for an election year. I don't know. But if we do, the pressure here is downward now. And we're probably going to see a, there we go. Sorry about that, guys. We're probably going to see a bull market in commodities. That's what I would bet on. Mike Zaccardi says B of A industrial momentum indicator is up month over month, about a 2-year high. The Bank of America Industrial Momentum Indicator typically leads global manufacturing PMI, so we're actually seeing a recovery here. And that's also why I think we're starting to see aluminum, copper, nickel, all these different base metals start to bottom. We're also seeing falling wedge patterns in a lot of the base metal producers. That is also correlated with this increase of this momentum indicator and the potential increase in global manufacturing PMI. It's all interconnected, guys. It's all interconnected. Let me zoom this in a little bit more there. All right. As we go down, natural gas may soon be the #1 source of primary energy in the United States. So this is quadrillion BTU in the U.S. primary energy consumption. You can see natural gas and petroleum battling it out, but natural gas has got the momentum behind it. We are putting in place natural gas power stations with coal. So we're replacing coal. That's why coal's diving down and why natural gas is basically ripping to the upside. Natural gas is also the swing producer for when solar and wind are not producing. We've got energy fantasies versus energy realities, an excellent reminder. So rethinking perceived wisdom, it says here, and let me get everything in there. It says it may make for some awkward conversations, but perceived wisdom on the energy transition is due to a serious rethink. We need to move away from categorizing energy sources as good or bad. We need to reflect on the realities on the ground and park the misguided narrative of there being no need for new oil and natural gas fields. With oil and gas demand continuing to rise to historically high levels, it is not a prudent or stable way forward for global energy security. We need to invest in all energies, all technologies, and recognize the needs of people around the world, delivering on both our energy security and climate objectives. All of the dots require connecting, not just a few. Our energy and climate ambitions necessitate realistic policies that ensure that emissions are reduced while populations have access to affordable energy products and services they require to live a comfortable life. Agreed. So Mike Zaccardi says, Bank of America LO exposure to energy is well below average. Hedge fund exposure is just off an all-time low. Such a good time to be looking at energy right now because there's no money in it. And when the money rotates over, we saw that chart when tech underperforms. They're all over in tech right now. When tech underperforms, these are all going to rotate and they're going to go up to get more exposure to energy. And energy and precious metals are in the opposite move of tech. And that money's going to rotate over. Shanghai silver versus COMEX silver, we still see that big disconnect between price, and we're probably going to see metals continue, the physical metals continue eastward. It says, when people say that the economy is super strong, please understand we are running at historic deficits. 6.2% of GDP, never seen before outside of World War II, et cetera, et cetera. So this is, again, federal surplus or deficit percent gross. We are spending, fiscal spending, massively still today. Coming down, we say Ray Dalio voiced strong concerns about the U.S. debt crisis and says he's hedging with gold, while Warren Buffett continues to see little to no value in gold. Great investors, different perspectives. Makes sense. I like gold for sure. This is Goldman. It says, Goldman, the secular underperformance of value relative to growth is starting to shift. We're in the growth stocks. They bottomed in 2020 here. And that's your energy and some of your other value plays in commodities. And I think we're going to see a big outperformance coming forward. What's going to drive that outperformance is inflation. Inflation and higher interest rates. That's what's going to drive it, in my opinion. So we are at a very cheap location, and this is more or less like a ratio chart, value versus growth, and commodities versus like the S&P 500. XLE, energy bouncing at a logical support level, coupled with RSI staying above 50, shows the bulls are in control. The breadth is also supportive, which is your percent above 50-day moving average and above 20-day. So the breadth is good. We are doing a retest here, and we're probably going to see a big move to the upside, a big, big move in energy. And that's where I think interest rates are going to follow energy up. Copper production deficits, as far as the eye can see. Look at these deficits, guys. And we just talked about 2024 and the deficits that could impact all this with the some of the smelters. And look at they don't get better; they get worse with time. They kind of hold out to 2026. So we're running smaller deficits, but then the deficits really get big starting in 2027. So copper market looks really good for potential investments. We're already in it. I've been in it for a while, and we've seen some pretty big moves already in the copper mining companies. Commodities are resurging. That means inflation resurgence risk is real. And we got a nice support level through here. And we broke through it, and we've done a retest, and now we're starting to work our way back up again. We can also see the percent here working its way on up above 50% for the commodities breadth, 5-day smoothing. So that looks really good on both charts, the global commodity chart index, and then also the breadth. I like this chart from Market Sniper, guys, because I like platinum, really. So it says, could platinum be even better mover than silver? Chart is a 2x monthly XPT divided by silver divided by the consumer price index for real terms rebasing. Kinked 3 impulse falling wedge. And if you look at this, this goes back to 1998. We've got 1 hump, 2 hump, 3 hump, and then you can see the downtrend line, and it's basically a falling wedge. And we could see the last little move in the corner here before a big move higher where platinum could outperform silver. If you've been part of the website, we've talked about platinum and the potential outperformance that could occur and why it generally occurs at the beginning of a commodity bull market. The reason I continue to say that we are early is because this hasn't broken out yet. Platinum outperforms gold and silver at the beginning, at least previous bull markets, at the beginning of commodity bull markets and inflationary cycles. I do think that platinum is going to be a big winner here, a big, 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 big winner. And this is only from 98. You don't even want to see what this chart looks like going back into the 1800s. We could have a monster move, monstrous move that will dwarf where this is at up here. The potential there in the ratio chart. Here's SILJ quarterly, just put in its third largest bull hammer candle in its history. I expect the latest one to take price to $30 minimum out of an impressive bull flag. Here's the bull flag that we've broken. And we can see a big move up in SILJ, the ETF. And that's where we're going to end it, guys. That's what I've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys want to figure out how to play all this information here, whether it's copper, silver, energy services, coal, base metals. We play all of it. Play everything on the website. Just to let you guys know, I do a midweek update on Wednesdays where I do a video and you guys can see what I see in real terms charting, and you can see it real time because I go over it and explain what I like in the market and what I'm doing position wise and where I would be purchasing some things. And then we also have the question and answer sessions on the weekend where I dive into strategies of that I deploy, how I view things, bigger picture view of the overall markets, look at some ratios potentially, and then look at maybe the psychology, herd psychology, technical analysis, kind of get into the nitty gritty on some of this stuff. So that's what is offered really on that website and our community. We also have a Discord channel if you want to join and talk to other members and myself and ask questions or whatever you've got. And again, I only share what I'm doing. You guys can do what you want and how to set it up. And I do talk about portfolio allocation and all that stuff of how I set mine up. Doesn't mean you have to be like me. I'm just giving an example so you guys have another piece of information and what I've been successful with historically. But that's what I've got for today, guys. We'll catch you later. This is Finding Value.